Now we come to the part of the show that I actually get most feedback on. And it's the part of the show where I talk about three things that I think individual investors need to focus on before they make their investment decisions. And you can see our three things here today. Fed rate decision next Wednesday. Yes, we had our rate decision today, but as I say quite often, what the Fed does affects our markets here in Canada and the US markets far more than what the Bank of Canada does, unfortunately, or perhaps fortunately. There's going to be a lot of data that we've already received and some more data coming out between now and next week so that the Fed can make the best decision possible. We'll touch on that. Expectations too high. Have expectations gone a lot higher, perhaps too high for many companies that they just can't live up to those expectations. When they report earnings, it's just not good enough. Investors seem to want to sell the stock. We'll talk about that. Take emotion out of investing. I can't tell you how many conversations I've had recently where investors are saying, you know what, Alan, why do we own this stock? It's not really doing much right now. Yeah, it's paying a good dividend, but why don't we get into something more sexier, something that is moving quicker, something that, that I think we're going to have gains quicker. Emotionally, they're trying to chase what's going on out there. And I just don't think that's a recipe for success. So we'll talk about taking the emotion out of investing, because I think a lot of investors right now are putting a lot of emotion into what they're investing in. So let's get to our first topic, the Fed rate decision. And as I said, they'll have a Fed meeting next week. And it's still anticipated that they will lower the rate by 25 basis points, even though most of the economic data that we have been receiving, we just received CPI data in the US this week. We're going to get, actually today, we're going to get PPI, which is the producer price index, which are your wholesale prices. We'll get that or look at that number tomorrow. But the consumer price index, a measure of inflation for the consumer, how much they're paying. It is a little bit skewed more towards real estate than the PCE, which is the personal consumption and expenditures. Another favorite for the Fed to look at regarding inflation. But CPI definitely gives us a look into what's going on with inflation. And we had that number today. Before we get to that number, however, let's take a look at our target range for the federal funds rate. We have a chart here which is showing that, yes, the Fed funds rate is coming down 4.5% right now. We're expecting another quarter basis point. That would take us to 4.25. Coincidentally, that would be exactly 1 percentage point higher than the Bank of Canada rate. And at what point does that discrepancy or that gap between the two start to affect things? We're already seeing it affecting our currency, but when does it start to affect trading between the two countries? Exporting, importing, when do those things start to become affected? I'm going to say right about now, in my opinion, I think those things are being affected. But as I said, there's a lot of data. A lot of data has come out already. GDP, our next chart, shows you 2.8% was the GDP reading for Q3. I've heard that Q4, quarter number 4 for 2024, is actually trending even higher, above 3%. I heard as much as 3.2% for the fourth quarter. To me, that would be just a blowout number, a number that, I think if anybody would have anticipated that, he probably would have said, no, there's just no way with interest rates in restrictive territory in the US. How could they possibly have GDP above 3%, between 3.5%? Well, it looks like that is what's going to happen. And again, these are the types of data points that keep the Fed from saying, we have to cut quicker. They don't. The economy is doing extremely well right now. How do we know as well? Let's take a look at the jobs chart out of the US. Jobs, 227,000 jobs created for the month of November. Again, very strong number. Don't compare that to the October number. That was a little skewed because we had the hurricanes and a few other things, a few strikes going on. But compare that to the September number, it's just below it. So just under. Again, falling in within the range of expectation, both on jobs and actually CPI. CPI we'll get to right now. You can look at the number here, consumer price index, 2.7%. Ticked a little bit higher, but the core reading, which takes out food and energy, stayed at 3.3%. So again, as expected, and maybe that's why the markets took that in a positive manner this morning when CPI came out and it was expected. Perhaps that's why the market did not go down. In fact, it actually moved higher before the market opened this morning. And last I checked, NASDAQ was up significantly. Dow Jones was kind of flatlining, S&P up a little bit. But overall, I think that, these data points are going to be huge. And we're also going to get retail sales, where, as I said, PPI tomorrow, which is wholesale prices. So we still have some data points to come before the Fed makes their decision next week. And as I said, right now, the odds are 25 basis points. If they don't go 25 basis points, if they stay as is, I think that's going to have a pretty negative impact on our dollar going forward. And we could see our dollar fall below 70 cents perhaps. So hopefully they go a quarter point. I think the market has it factored in. If they don't, I think the market will pull back. But definitely something to keep an eye on before you make your investment decisions. The next topic I wanted to get to, expectations too high. And what do I mean by that? Well, I just think that the market is pricing in these really lofty expectations, especially in tech. And I think pretty soon they may take these lofty expectations to other sectors like bank, because right now you're seeing some really blowout numbers in technology land. Oracle, which we have a chart on, which we can show here, they were a stock or a company that just reported earnings yesterday. And I thought their numbers were good. Yeah, they may have slightly missed on the expectation, but they grew their AI infrastructure business 52% year over year. Unbelievable. And yet the stock, as you can see it here, this is a number from yesterday, dropped almost 7%. So what kind of expectation was built into the Oracle numbers? We also had another AI company report yesterday, and it was C3 AI to be exact. They're another infrastructure or AI play, and we don't have a chart on that, but they reported blowout numbers. The stock is up over 100% since September alone. But because they were up so much coming into their earnings, stock market said, oh, well, it was expected that they were going to have blowout numbers. Stock actually went down initially, and then it went higher late in the day. But it was unbelievable to see the stock open up lower with such just amazing numbers coming out of their AI investments and their AI part of their business. Another stock that we do have a chart on, which is AMD, and we've seen this company report what I think is great earnings. They came into this year saying they're going to make $2 billion in AI. Now they're up to $5 billion, $5.5 billion in AI, in that range right now. And yet the market went from about $225 a share on AMD to now sitting at under $130 a share. Unbelievable how much the market has sold off AMD stock, even though AMD business is just going through the roof. They can't keep up with the demand for their chips. Nvidia, the biggest chip maker in the world, the biggest chip company, the biggest company in the world, them and Apple are neck and neck for the biggest market cap. And we've seen their stock pull back after they report earnings. They grew their recent earnings 94%. Everybody would be totally excited. Yeah. We would be very excited if a business grew by 94%. But because they grew 116% the quarter before and over 200% the quarter before that, people sold the stock. Investors sold the stock. So again, high expectations, very lofty expectations. This is what these tech companies have to deal with. And as I said, if you are a company in another sector that has done well and we've seen your stock rise, yeah, your expectations will be ratcheted higher and that bar will continue to go up. And to me, this is a bit of a worry. And I think individual investors need to keep an eye on this, because if you're buying into a company that has lofty expectations, well, I think you got to be a little bit careful, because if they don't meet expectations, possibility for a larger than expected sell-off is there. So keep an eye on expectations. The third point I wanted to make to individual investors before you make your investment decisions is this idea of taking emotion out of investing. And whenever you talk about emotion and investing, you have to show the investment emotional cycle. Very popular illustration, which we have here. There it is. And you can see all the different emotions from the cycle here. It's still early days, I'll keep my eye on the market, to good thing I didn't wait any longer. Point of maximum risk, people don't realize, is when the market is at a top. Now, markets are at all-time highs right now. Does that mean they're at point of maximum risk right now? Well, I think it just depends on what type of investments you own within the market, but that's what the cycle of emotion says. And you can see here, point of maximum fear is probably the best time to get into the market. So there's your cycle of emotions. And what I'm getting right now is a lot of this type of FOMO, right? Fear of missing out. I get a lot of investors calling me up and saying, you know what, Alan, my investment that I have right now in, let's take TD Bank. We have a chart on TD Bank. I've had a number of people call me up and say, why do we own TD Bank? It looks like stock's not going to do anything. A lot of people are saying it's sort of dead money right now, even though it pays a 5.5% dividend, which is fantastic. If I could just sit in money and not have it go up or down, you could use that 5.5% as a GIC or bond replacement. You know, I don't think there's any worry that TD is not going to make their dividend payments. In fact, they just increased their dividend this past quarter. So you're looking at a name like TD or something else that hasn't moved, and I'm getting a lot of questions. Should we sell it? Should I go out and buy a tech name, something that is moving a lot quicker? And my answer is no. I think you got to stay disciplined. You got to stay with these good quality names. And I think TD Bank is a good quality name. May not be moving a whole lot right now. We just had a bit of a negative report from TD this past quarter. And we know that it's gone through a lot of issues regarding money laundering issues. So we know TD is in the doghouse right now. How quickly it will be in that dog, or how soon it will get out of the doghouse, remains to be seen. But if you pull up that chart just quickly once again, we could see that TD has started to move higher in the last couple of days. If you pull up, there it is. So everybody who's called me in the last few days saying, let's sell TD, you would have missed out on probably 3 to 5% growth just in the last few days. So you can't leave good quality names just because they seem to be struggling right now to find something that has already moved higher. You want to buy low, sell high. You don't want to buy high to sell low. So for me, taking that emotion out of investing, trying to chase the hot investment, that FOMO, fear of missing out, you got to really fight your instincts or fight that feeling of doing that. And to me, that is quite important. So keeping things real, keeping the emotion out of investing, I think is extremely important. Also, keeping an eye on the Fed, what they're going to do over the next, I guess, their next Fed meeting or the next week or so, and then expectations. You want to own a stock that has high expectations? I think you have to be mindful of that as well. So those are the three things that I think individual investors should focus on at this time before you make your investment decisions.